Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go to the upside into the charts. So Bitcoin got a huge push off of that 886 kind of platform. This is the first time in a long time we have not, actually since this channel was drawn over a year ago, this diagonal pitch fan, we've always rejected off the 886 every time we came to it. 886 rejection, 886 rejection. First time we went above it and turned the 886 into a platform of sorts to the upside. Are we going to come back into this 886 or retest it for support, or come back to the 786? That is the question, isn't it? What is going on with the liquidity? We came over to a point of control node from over here. There's a volume node that we are above right now. We're playing around with the resistance here. Once we get above this point, there's another node up here at the 54,000 level. That's the next resistance zone. If you want to be particular about wicks, then you have some wicks over here that we could come back to over there at 53,429. So these are other resistance points that we could be looking at. Let's just take the wick from over here to be clear. It's at 52,000 even. So we'll be looking to see, there's another one over here. There's a reactionary point from September 7th, the good old drop from 52,115. So you have some resistance levels to look out for within this range. Let's go look at the liquidity. What is the liquidity? Well, people lock their liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss. And we get to see where those crispy characters are, so let's do it now. 71 million in shorts squeezed for BTC, 29 million for ETH, and a bunch of shorts on the alts. And in the last 4 hours, came back into just a few million on the longs, but holding the range. 10 million in the last 12 on the longs, and in the last hour some shorts still getting squeezed on the alts.
Fatality.
And yeah, as we come into the heat map, let's go ahead and take a look. You're still generating 140 up in that 52,384 region. 52,384 will take you up into that wick area over here. So do we come up to that region to sweep the shorts? Once again, pound them. There is 154 million down at that 51K as well. I would imagine you come down to that before you go to the upside, as you have been paying the longs ubiquitously. As we go to the 6 month and expand higher, there's not much on this higher time frame because it doesn't pull into the data that's over here. You'd have to have a 2-year, which we used to do with high block, but it wouldn't be worth the fee per month. All right, so coming to 565 million down at 50,883, and 328 million at 49K. A big gap from that 48K range. Not really much longed in here, using the shorts to squeeze up to that. So you do have a gap in here that could be a breakaway gap to go higher. If not, you could Bart Simpson all the way back down, similar to what we did here. Let's go see what the levels of liquidity look like in another format. So you have a large amount, 268 million up at that 40.52.2 region. They could just keep pounding as they keep entering. New shorts enter, and there's a thicker region up in here. Going to the weekly, you do have, once you get there, if the shorts are fatigued, do they come down into these regions? There's a large amount down in that 50,005 pocket, and overall 2.5 billion down in that 44K range. Okay, I think we looked at the liquidity fair enough. I got to take my son to school early, so once again we're doing it a bit faster than usual. We can't do a broad market sweep, but all right, so let's hold ourselves to the flame of what we said yesterday. We were saying if you get a cascade through the cloud, then look for a C wave to the downside. If you hold the cloud, what did I say? If you hold the cloud, where are you going? Back up to the upside, and we said 50,007 had the liquidity. We did not know it would go that high, but we did say if it held that hourly cloud. More importantly was the 15-minute cloud that we were looking at, that we left here for you to see, was here. Okay, so after the live, we started to come down, held the range through the whole Asian session, never broke the super trend. Interesting to note, the super trend held, and then bang, we came up in the London session, and that was what she wrote. So gotta have both probabilities on your side and look at negation levels. Super trend not breaking was a key idea to continuation to the upside. Do we see some let's make our descent through the time frames and see what's going on. Link in the description for more. momentummaster.info. Scroll down to features, toggle at your leisure, trend cloud, baselines, stochastic array, and more. Dynamic alerts to your phone. And let's go to that 3-day time frame. Eyes get dry staring at a screen so much. So this is midweek reversal, February 15th. So do we get a little bit of a reversal on the Thursday? You could come up to this 53,294.706 level of the deeper retrace from the downside. You have a this 3 days closing in 51 minutes. Actually, this 3-day will close. So we got the crossed up event, and this 3-day will close out strong with a large amount of volume. So you got some empty volume. Well, not necessarily empty, but this last 3-day was a large amount reclaimed, and it's going to close with this intact. So this is 3 white soldiers. I don't know why they call them white, but 3 white soldiers on the 3-day time frame. Basically 3 in a row. Boom, boom, boom. And this is for that bullish narrative. So you have this 3 white soldiers, and then starting to cascade higher, perhaps. Okay, on the 3-day time frame. On the oscillator, you have the Williams getting a push up with stochastic reset. The money flow beneath the RSI suggestive you can keep drifting to the upside. You got the cross up event of the previous cross down that did not play out so heavily at that 38.8 region. We were looking for that long, and then the rest is history. Now we're getting the cross up of the 3-day. This means that most likely if I go to the weekly will be crossing up currently as well. Now the weekly did not close yet, so does this weekly come back up for this cross up to see a continuation of bullishness? One thing to look out for in the back burner is to see their greed is up to 74. So as the greed rises, do people get cocky, and we see a September 7th, 2021 drop, a furious drop to purge all of that liquidity down to the weekly cloud, or 27% away down to here at 37, would not be something that I've not seen before. All right, so coming to the daily time frame, these super trends, the baselines are still crossing up. We were talking about previously when we were down here that this baseline, if you close beneath it, it's the beginnings of the downtrend, but we closed this above the super trend, and or not the super trend, the baseline. So this is still pointing to 2 o'clock with momentum to the upside on the daily time frame. The money flow and the RSI flowing up nicely. The Williams coming to an overbought status, still momentum on your side by the looks of it here and now. Coming to the 22-hour time frame, starting to hold this baseline as well. Previously we were starting to come beneath it, so we were saying, does this start to flash against you to the downside? If it closed candles, we were saying if it closes candles down here, this could be the beginnings of a pullback, but it's not happening. It's the opposite is true, and you had the RSI come down to the money flow, and then we held, so they reset the values for that. Interesting to note. Still overbought though, so you could be reaching the end at some point in time. Coming to the 12-hour. 12-hour is still pointing 2 o'clock on the baselines. We are not failing them just yet. 7.9% away down to that 47.7, which is also a local point of control. If we start failing these points of control, you have another line in the sand here. So if we make this red for point of control, if you come back to that point of control at 49K and fail through that, the next line is 48.111. So you have these different points of control you could be coming back to. The one that we held over here from that long consolidation time burst us up from December, that 64-day consolidation range. Boom. All right, so money flow is beneath the RSI, suggestive that it continues higher on this 12-hour time frame, even though you're overbought on the stochastic. Coming to the 6-hour time frame, looking to try to push it up here on the 6-hour time frame. You had a previous cross down, and it's been pushing its way up despite that cross down event. And you're bouncing off of the channel here, getting some momentum off order blocks on the channel. And the money flow, you had some bullish divergence on the RSI as you reset, coming higher. Williams is triple topping here and getting fatigued, so eventually seeing the RSI come down. Generally when it's a sudden move, the RSI comes down to meet the money flow. So coming up like this, the money flow back in seems a bit strange. Maybe we get the RSI pullback. We are getting bearish divergence. What do I mean by that? We're making a higher high, but on the RSI we're making a lower high. So right here, right now, you're getting some bearish divergence on the RSI that could play out. We'll take it hour by hour, day by day. We'll see how this 6-hour plays out. You're getting a blue vector candle on the 6, which is stopping volume, and then in the last 12 hours kind of bled of volume. Okay, in the next 4-hour time frame, you had some hidden bullish play out here and then play out again here. So the money flow coming back to the RSI level, and you're kind of making a C level divergence from this top, similar to the 6-hour. So you're getting a little bit of bearish divergence on the 4-hour time frame. This is what they call exaggerated. And if you look at the hourly, coming to the more local one, the stochastic is coming down in a manner here. You have the stochastic coming, the Williams possibly holding the range, but could open the average here to come down. You got the alarm coming. Does it suppress the hourly takeoff or not? Looking at the 15, and then we'll start to expand to the other asset classes and DXY and so on and so forth. So you had some bearish divergence on the RSI here. If we look at it, we have one, technically it was 1, 2, but this is not a bigger top than this one, so this is not the same pattern for a short as this one. This one you had hit to the high, higher hit to the high, and then lower hit to the high for the entry. You have the dots there for that manipulation zone, and boom, also happens to be that 786 region entry, perfect entry, and then down to the downside. So not seeing that same structure here per se, unless this goes up and fails. So if this goes up to that 52.5, comes down, and then comes up, and then comes down, then you have 1, 2, 3 if this becomes a wick. So you got 1 here. Do you get a second and a third hit is the question. You need to look at the open interest. We got 4.68 billion open. A lot of longs opened here, didn't close so many of them yet. The shorts just getting pounded. A lot of liquidations on each side here, or on the short side. At what point do the longs take profit and furiously send it down, or do they? We've seen runs up just that don't abate for weeks even. Let's go back in time and see where that occurred. October is coming to mind, October 12th. So we had October here, October 1st to October 4th, October 7th, and then it paused for a little bit. 10th, 13th, 16th, 19th, and then it just went up, 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 up. So this could be occurring here too. We're doing a lot more pausing, so the pauses could be a reaccumulation from this first burst up. So who knows what the cards may hold. Let's go into the 5-minute and look at the dominance and the total and see if we can put it in a box, or see if we can see where it will go. Got to go in the next 10 minutes or so. Just to say shout out, ETFs have changed BTC forever. What's up, Spragadocious? So the ETFs, there's always been institutional money in the game, just not officially. So I don't know if that is the money that's causing it to go up right now, right here. It's the same kind of moves that I've seen before. Not really, I don't notice this difference so much. Not that I disagree, I'm just saying what I've seen. It doesn't seem to be super different just yet. We are going into the halving from April, so that's something to look out for. In total, we held the 236, banged off of that in February, came up to the 1382, and now we came up to the 1618. Up here at 1.865 trillion. We're coming above that to become to the 1.9 and 2 trillion up above here. For that full insertion of money into the total market cap. Coming to total 3 is reclaiming a region here within this gap, possibly coming up to that $538 billion mark, just showing signs of strength at that 706, at 503, got that access granted to the upside, and boom, came up to the gap. So the gap is basically recovered, so we're going to delete that for now, and then just put this over here, change it to green for the range area high. Alright, so we have these possibilities to come up to the 1382 for total, 3 for the altcoins. If we look at BTC dominance, dominance came up into this region, rejected off of it initially, and then possibly coming up into this. If dominance takes over and BTC still gets wild, then the alts, while they're rising, still don't have their super alt season just yet. So if we go to if Bitcoin even pauses at this point and doesn't drop but just pauses, then the alts could go crazy. So let's go see what Crypto Bubbles has to say. Got Bonk in the last hour, Bonk, DYM, Mint, MNT, STX, Say, Vet, VChain, Python, Room, ETH for the week, STX, Bean, Bonk, Mint, DIM, Immutable. These things going off the chain for this last week. Coming to the USDT dominance. The USDT dominance broke the rocket ship that was printing here. The previous one did come off here, but we are coming down. The next level of support is down in this region at the 4.78%, so just more USDT come into the market here. There's not any reason to bounce at this current level we're at. If we look over to the left here, I mean, technically you have some line here. If I look at this, we wicked off of that. Is that where we are right now? It is. So there is technically a place where we could bounce off of in this current region. You break this, you can come all the way down to the 479 for more insertion of dinero. All right, so unclear when I'm not going to try to call a top here because it's ultra bullish. This is amazingly strong price action for BTC, and we've seen it just rip to the upside without abating many times before. All right, so in a nutshell, let's put it in a nutshell for you with the bow tie on top. So you have the 6 hour ambiguously going higher, yet the stochastic at a point where it could go either way, but the Williams getting gassed after previously being pinned to the ceiling. You're getting slight bearish divergence on the 6 hour. Does that start to play out? Even when it played out before, it pulled back slightly before going higher. So if you are looking at a short, consider taking it lightly, because you don't want to stand in front of a freight train. Coming to the 4 hour, you're getting that money flow back up to the RSI. And does this Williams start to fatigue out? This is midweek reversal Thursday. Some of the news that we have inbound is Forex Factory here. You have some Australian red folders inbound, German red folders inbound, and the core retail sales red folder unemployment claims for America in the pre-market. So expect a pre-market manipulation before New York opens. Then some orange folders in the later half after lunch. And that is the news for today. So do they manipulate into a midweek reversal, go up to go down? Once again, the liquidity suggests that you could come up to that 52,400-ish, 500 range, and then possibly pull back into some of this liquidity below. You have a good 355 billion down at 50,883. If you're going the distance, down at 49k as well, but you got a huge gap of nothing here. So unless we break this trend completely, it's unlikely to go back to 48k anytime soon. You got 493 million up at 52.4 as people just keep piling in on the shorts, as you see here. So the shorts interest is not dropping. So until that interest drops, there's going to be no reason for it to go back. So they're not opening it in full force, as you see here. The net shorts are still opening, and they got punished, but still opening nonetheless. Kind of hard to call it here, to be honest with you. Do we get up to here and start to do? My best thing was saying if we come up to that 52.7, come down, come up, and then come down again, making a head and shoulder with some bearish divergence. That would be your best bet, is to look for candle closes with some bearish divergence intact on some money flow and RSI. So how high do we go up here? That is the question. We have news inbound, so you would be taking that, and then if we fade, we'd be seeing like something like this, where we do the same rinse and repeat of this guy. Okay, and then that would appear on like an hourly or something. So you would be seeing some sort of manipulation up to a region, and then it comes down, then it comes back up. This is a little bit far off in time, but how does London react to New York's unemployment news. So we'll see. We're going to play it ear by ear. Right now we could just go sideways, into London's news, and then watch the manipulation occur. You got some ranges up here at 52.8. These are your levels. And that's my story, and I'm sticking to it, folks. So thank you for coming on into the live and sharing your essence with me in this eternal moment, of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the pursuit